Hey, what's up, stock compounders? Brad here. So today I want to talk about SPACs. Are SPACs signaling a stock market crash, or is it just time to buy that next SPAC on your wish list? So I actually bought a SPAC today, okay? And we're going to get into which one I bought. But first, I'm going to kind of walk through the process that I used to decide which SPAC to buy. So as with all stocks, all right, this is really the top of my funnel for investment ideas. I look at super investors. Does a super investor own it? How many super investors own it? And what was the likely price that they were able to buy in to that particular stock? So the super investor who's kind of best known these days for buying SPACs is Seth Klarman. And of course, Seth Klarman is a legendary value investor. He wrote the book Margin of Safety. Okay, so this guy knows what he's doing when it comes to, not losing money, watching the downside above all else. So, it's pretty interesting that he's been very active in the SPAC space. So if we go to kind of his profile on Dataroma, we can see what he bought in the fourth quarter of 2020. And towards the bottom of the list is when you're going to get into these SPACs. So we've got Ajax, Red Ball, Vesper, Avanti, Reinvent Technology Partners. You've got about almost a dozen SPACs down here that Seth Klarman has bought recently. So my approach was, all right, make a list of these SPACs. So that's what I did here. Here are the SPACs that Klarman with Baupost owns as of quarter four. Okay, we don't know if he still owns these. I'm guessing there's a pretty good chance he still owns them. So my next step was to go into each one of these SPACs and figure out, all right, is it just Klarman that owns these, or are there other super investors? So let's go to RTP, for example. So the way to do that is we search that right up here in Dataroma. So let's try, that didn't work, rtp.u. That wasn't right. rtp.u. What is this auto? Come on. All right, let's try a different one. DGNS. That one we're striking out with. I did this before, so I know it worked, but it wasn't working for me. So, Dragoneer Growth Opportunities Corp. What a fantastic name, by the way, for a SPAC. Dragoneer. That just gets me pumped up. So you can see here there's 4 super investors who own DGNS, or at least own them at the end of the last quarter when these 13Fs came out. So, and they were bought new, right? DGNS. So we've got Lee Ainsley, we've got David Tepper. David Tepper is one of my favorite super investors to clone, to find great new ideas from. Seth Klarman and Daniel Loeb. So fantastic list there of super investors who own DGNS. So essentially what I'm looking for here, I've sorted by how many gurus own these SPACs that are owned by Baupost. And I wanted to see how close to NAV can we get. So the net asset value for each of these SPACs is $10 per share. Okay, that's basically the cash on the balance sheet for these companies that are looking to bring private companies public. So, we look at the price today, and this gives us a sense, how close to net asset value can I purchase this stock? So this one really caught my attention, Avanti. And the reason for that, it actually wasn't this low earlier today when I was looking at it. I placed a limit order on Robinhood at this price, $10.05. But at the time, it was like $10.10. It ended the trading day at like $10.22. My order actually executed after hours at like 2:07 p.m. Pacific Standard Time. So I was actually pretty surprised to end up with this one. But the thing that excites me about this, at $10.05, it's only 0.5% over net asset value. Okay, to me that is very compelling, and the reason for that, and I did a little digging on this. What happens when these SPACs go through a market crash? Okay, and what I did was I looked at Oaktree. Okay, now Oaktree, I'm sure a lot of you know Howard Marks. Oaktree ran a SPAC that announced, when did it announce a deal? Somewhere in here, sometime around December 22nd. Hims and Hers. Okay, that was the deal that was announced for Oaktree's first SPAC. And you can see the pop here. It was trading around 1070, and then that wasn't right. It was trading somewhere around 1220, let's say. And then it popped up to 15. It got up to about $18 after that deal announcement with Hims and Hers. But the more important thing I want to point out here, I don't know what I just clicked on. The more important thing I want to point out, come on. The downside of refusing to edit my videos is sometimes we get some technical snafus here. But check this out. This gives us what we need, 52-week range. Okay? What happened to this Oaktree SPAC back on March 23rd? You guys remember March 23rd? That was the low for the S&P 500. Now this SPAC dropped down, you can see it here, dipped down to $9.40. Okay? Net asset value of 10 dropped down to 940. Okay? So it lost 6% from net asset value. When the S&P was down, 30% back last March in 2020. So, the way I'm playing these SPACs, it's not a typical investment, right? A typical value investment where I'm buying because I like the business and I can project the future cash flows of the business, and that's compelling to me today. That's not what this is. This is more of a cash alternative, okay? It's, heads I win, tails I don't lose much. It's, I'm probably going to make a decent return on my cash by doing something like this, buying close to net asset value in these SPACs that have good sponsors, rather than just having cash sitting on the sidelines waiting for a deal. So it's that heads I win, tails I don't lose much. Asymmetric, upside to downside. Now the downside here with this SPAC I just bought today, it's probably around 950, 940. With the 30% drawdown last March, Oaktree was down to 940. Maybe this goes down to $9 if it's an absolute bloodbath in the stock market, but it's hard to imagine it going much below $9. Okay, so the downside in my head is around 10%. Okay, it's hard to imagine it going much lower than 10% from where it is now. Now the upside. In order to get a sense of the upside, this is a SPAC I own. I owned it before, it popped, before IPOE announced the merger with SoFi, Social Finance. I bought somewhere in here on 1150, I think. And right before the deal announcement, it was at $12.12. And then you've got the SoFi deal announcement, $19.14. Okay, so more than a 50% pop. So that's really what's possible, and a lot more is actually possible with these SPACs than this. I mean, you can see what it's done since then, up to around 26 at its peak. So pretty compelling if you can get into these things close to NAV and there's a solid team behind the SPAC. But what's interesting is what's been happening, for the last couple weeks. I mean, February 16th, SoFi, was still roaring pretty strong. And look what's happened. It's just down, 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 down. Okay. And anybody who's been following SPACs have seen, just in the last couple days, it has been a bloodbath in SPAC land. So, what does that tell us? There's some smart folks in corner of Berkshire and Fairfax who are actually looking at SPACs as a way to track market sentiment, right? And the idea there is once some of these, better appreciated SPACs with a solid team behind them get down to $9.50 or even $9 a share, that could be a pretty good indication of a market bottom, okay? Maximum negative sentiment at that point. That was kind of an interesting thing I took away corner of Berkshire and Fairfax recently. So, I'm watching these very closely, more than just, buying as this asymmetric upside to downside opportunity. I think watching these SPACs could be useful in terms of figuring out when might be a good time to start buying some of these, stocks on your wish list. So that was intriguing to me. But so I did buy Avanti at $10.05. And it may take 6 months. It may take a year. They may never even find a deal. Okay, that's the challenge with some of these SPACs for people, especially in the market these days, where things seem to be moving so quickly. The idea of buying something at around net asset value and waiting is very difficult for most people who are involved in SPACs. But therein lies the opportunity. Someone who can come in with a little bit of patience could potentially see, that big deal pop if they're willing to wait. Another way I'm treating this, I said it's a cash alternative. The beautiful thing about this is, if the market does tank, say the SPAC goes down to $9.50 or $9.40, right? So, okay, I lose 6%, but I can pull that cash out and I still have the vast majority of it, and I can deploy it into, great opportunities near the bottom, okay? Companies that I really want to buy when they get down to those bargain prices. Of course, I could do the same thing if I just had cash in my account, but I wouldn't be exposed to those potential upside events like the deal announcements in SPACs. So to me, and I don't have all of my cash in SPACs, it's really just something I'm experimenting with at the moment. But to me, it's a nice balance between having access to cash when I need it, with a low kind of downside risk, and being exposed to kind of the market frenzy, right? These potential deal pops that can, double or even more upon deal announcement. So it's just been a really interesting space that I've been following, and I just wanted to share that. I actually just did this research today on, what happens when the market tanks, to SPACs in particular. And, I'm encouraged by this price chart from Oaktree for their first SPAC. I actually own some of Oaktree's second SPAC, OACB. I own a few of Chamath's SPACs. I own that second Oaktree SPAC, and I own Avanti. And that's really the only SPACs that I own at the moment. But I'm always looking for new ones, and it'll be very interesting if, some of these with even more gurus involved than Avanti, Ajax, Dragoneer, and RTP, if those start to come down near $10 per share, you can bet I will be parking some cash in those if that happens. At a 9% premium, 5% premium, it still feels a little frothy to me. I'm a value investor at heart. I want to be very close to that net asset value for this strategy. So anyway, guys, I just wanted to share my 2 cents on SPACs. Yeah, it's interesting. It's wild how quickly those SPACs have come down based on the last maybe 2 or 3 months of just frenzied excitement, frenzied enthusiasm in that space. So it'll be very interesting to see how that plays out. Anyway, guys, this is not financial advice. You all know that. Do your homework. But I'm curious to hear from you. Which SPACs are on your radar? I didn't even talk about these. These are not owned by Klarman or Baupost, but they're SPACs that I'm kind of watching. EQD is a SPAC with Sam Zell. Sam Zell is a fantastic value investor, really involved in the real estate space. Of course, Oaktree is one that I own at the moment. So yeah, there's no shortage of opportunities in SPACs. And I just want to leave you guys. I know Charlie Munger in Daily Journal, right, in his Daily Journal annual meeting, just feels like maybe within the last week, it was probably a couple weeks ago. I have a 4-month-old, so time is completely distorted. Munger, I think, referred to SPACs saying, as long as people are willing to buy shit will be sold. And it was kind of a reference, it seemed, to special purpose acquisition companies. So there is, you got to be careful out there. There's a lot of, nonsense happening in SPAC land. But, if you can find these SPACs that are owned by really great investors, that really increases your chances of doing well and not getting, unforeseen downside risk tossed your way. So anyway, guys, I will leave you with that, and I will see you all in the next video. Take care.